National news and movements happening at the moment?
Absolutely. There's two words that describe what's happening on the markets at the moment, and that's risk aversion. That means the smaller end of the market is being sold off aggressively, emerging markets are being sold off aggressively, and instead we're seeing a flight into safe haven currencies as well as safe haven assets. If we just have a look at the currency moves in the last couple of sessions, they've been quite extreme. If we have a look at the Swiss franc, which is thought of as a safe haven currency against the US currency, this is a two-day chart, so you can see that the Swiss franc has strengthened quite considerably, and the same thing when we look at the Japanese yen versus the US currency. So if we have a look at the Japanese yen versus the US currency over the last 5 days, this is what it looks like. So you can see we've been seeing a strengthening in those safe haven currencies. Same with safe haven type of assets or hard assets. We've seen oil prices hitting a 27-month high today. We've also seen gold prices up 2% in New York and then up 1% in the Asian session. Now it's interesting to note that despite the rises that we're seeing in the underlying commodities, the actual stocks aren't reacting on those commodity price moves. Instead, it does look like once again we've reverted to the high beta, low beta type of scenario where the defensives are outperforming, and they're the areas like healthcare, staples, utilities, the only three sectors on the market which actually saw a gain today. So all up, risk aversion, the theme on the markets at the moment.
Unthinkable. If you rewind back a month or two, everyone was incredibly bearish about gold. But we'll talk to one of those big bears in just a minute. But your thoughts on gold?
I think gold, we've seen incredible short covering, and that's really helped this massive move up that we've seen. The technicals are looking good for gold at the moment. However, when you look at gold, you have to look at the short-term outlook versus the medium-term and the long-term. And the short-term outlook has been boosted by short covering, the technicals, as well as the Syrian conflict. But the medium to long-term still looking negative on what's happening in terms of tapering in the US. And the thing to remember with war is that it tends to have a short-term impact on markets, whether it's the oil market or whether it's the gold market or whether it's the share market. It tends to be a short-term impact, and the market tends to get on with the fundamentals a little time later. In fact, if we have a look at some of the big events over the last couple of decades for the markets, we've seen September 11 was a huge one in 2011, and we also saw the Iraq War, which started on the 19th of March in 2003. And I've just been looking through the charts to see how the markets reacted, to get a sense of how lasting the impact that we are seeing and the risk aversion that we're seeing maybe on the markets. And if we just go back to September 11, which was a massive event for markets. In fact, September 11, we saw the US stock market closing for a whole week. You can see here the impact that we saw, but then we saw a bounce back, and 3 weeks later, we actually saw the market at pre-attack levels. So the market, sort of a 3-week time frame where we did see a bit of risk aversion in play. We see the same things with gold and oil as well. Gold spiked, oil actually went down lower after September 11. If we just have a look at the oil price, this is an interesting one as well. And this is the oil price. You can see that oil prices actually fell after September 11. We have a look at the Iraq War. That's probably a good one to look at the moment as well. And if we have a look at the Iraq War, 19th of March, I guess the US was aiming to shock and awe there. And if we have a look at the impact in terms of markets, you can see it's really a blip on the radar. And the week after that invasion took place, 1 week the market was up, and 1 week the market was down. So not much of an impact. The oil impact's an interesting one as well. Iraq War, that's August, temporary downwards, but you can see the rest of the year we actually saw oil prices trending upwards. So I think it was Baron Rothschild that said, "Buy when there's blood on the street," and he made a mint after the Battle of Waterloo. And I think in terms of asset markets, it's good to think of the short-term story versus the medium to long-term story.